Thank you, Dr. Corpus. The next form of business structure that I would like to discuss is the partnership. There are two kinds of partnership, a simple partnership and a limited liability partnership, or LLP. I'll talk about each of these in turn. Forming a simple partnership is straightforward, like becoming a sole trader, except that you have to agree to work with someone else. A partnership could be between a husband and wife, or two members of the same family or close friends. For example, a couple might run a catering business, or two car mechanics might leave employed work to set up a partnership together repairing cars. One obvious advantage of this is that if one partner is sick or on holiday, the other partner can carry on the business. And another is that it can be easier for a partnership to borrow money from a bank than it can for a sole trader. Of course, partners usually have an informal agreement to work together, but it's always better to have a formal arrangement to avoid disagreements. As with sole traders, each partner must be registered with the tax office as self-employed and must send in a tax return once a year. In addition, as the partnership is unlimited, all members are responsible for debt, so you and your partners may lose your personal possessions to pay debts if the business fails. The other structure for a partnership is the limited liability partnership, or LLP. This is similar to a simple partnership, as the partners share the income and expenses and also have to pay their own taxes to the tax office, but there are important differences. On the one hand, sole traders and simple partnerships don't have to legally register their businesses. On the other hand, LLPs have to be legally registered with Companies House. This means that at least two of the members are legally responsible for the partnership. They have to make sure that they send accounts to Companies House as well as to the tax office. They also need to send in an annual return, which is a document showing the name, address, and members of the partnership and any changes. If they don't do this, they may go to prison. So it's important to understand exactly what setting up an LLP means. So why should partners enter into a limited liability partnership? Well, usually, an LLP suits certain types of professionals who provide services, such as accountants, lawyers, consultants, and financial service providers. Another reason may be that partners want to do business with larger organizations who would prefer to give contracts to a registered company or partnership. In any event, an LLP offers the flexibility of being in a simple partnership, but also gives the partners protection so that they lose only the money that they have put into the partnership if it fails. However, if the partners earn a lot of money, they will still pay more tax than the owner of a limited liability company.
Thank you, Dr. Lethbridge. The last form of business I'd like to talk about is the limited liability company. The owners of a limited liability company are called members or shareholders, as they own shares in the company. A share is a divided up unit or part of the company. All businesses run the risk of failing or going bankrupt. If a business goes bankrupt, it has to close because it owes money and is not able to pay the money back. As I mentioned before, setting up a limited liability company, like an LLP, means that if the company fails or goes bankrupt, the business owners lose only what they have put into the business and not their own personal goods and property. This is the idea of liability, how much a business owes in debt if it can no longer operate and has to close. For example, if a sole trader goes bankrupt, he or she may need to sell his or her own house and possessions in order to pay any debts, because the business is not separate from the owner. With LLPs and limited liability companies, the owners and the businesses are separate, so property and goods owned by the business can be sold to pay debts, but not property and goods personally owned by the members or company shareholders. Just as with LLPs, limited liability companies, or limited companies for short, must be legally registered with Companies House. This means they must have a registered address where all the company documents and records must be kept. As with LLPs, accounts and annual returns must be submitted every year so that anyone can have a look at the company's finances before doing business with it. The level of administration is higher than with other business structures, and you need to have a managing director and at least one shareholder. In terms of paying tax, the company has to pay corporation tax on its profits, which is far less than income tax on large amounts, especially over around £50,000. However, you also have to pay income tax on any money you take as a salary from your company. As with the other business structures, the company tax assessment must be submitted to the tax office, but for corporation tax rather than income tax. The shareholders also have to submit their own personal tax assessments separately. As we've already mentioned, the company owners must also submit accounts to Companies House. This can all be quite complicated, so it's a good idea to get professional help and advice from an accountant. It's important to remember that running a limited company is more complex than being a sole trader, so it's important to do careful research and consider your situation before deciding which type of business to run. In any case, you could start as a sole trader and, if business is doing well, turn your business into a limited company at a later date.
So, let me summarize the differences and similarities between each business structure. On the one hand, it's fairly simple and inexpensive to set up as a sole trader. You don't have to worry about lots of administration and financial organization, and you can keep total control of your business and decision-making. On the other hand, you may end up paying more in tax than you would as a limited company. You are personally responsible for your debts and losses, and it might be more difficult to get valuable contracts if your business does not have limited liability. With regard to partnerships, there are two kinds: simple partnerships and LLPs. In comparison with sole traders, partnerships have the benefit of more people to plan and make decisions. It's easier to take care of the business when one partner is not able to take an active part, and it can also be easier to borrow money than for a sole trader. On the negative side, liability is shared among the partners, and having more than one owner can make things more complicated when there are disagreements or if the business needs to be brought to a close. One other difference between sole traders and partnerships is that the partners need to trust each other. If a partnership has serious money problems, one partner may leave the other to deal with the debts. Clearly, this is not a problem for sole traders. One similarity between partnerships and sole traders, though, is to do with tax. The sole trader must submit a yearly income tax assessment to the tax office. The same is true of partnerships, as members are treated individually for this purpose. When we compare simple partnerships with LLPs, we find various differences. For example, LLPs are legally required to submit their accounts and annual returns to Companies House. This is not something that is required for simple partnerships. Another difference is to do with debt. In an LLP, the partner's personal possessions and property are protected. In a simple partnership, however, like sole traders, the members are personally responsible for any business debts. Finally, limited liability companies have two main advantages over simple partnerships and sole traders. This type of structure limits the financial liabilities of the owners to business losses and not personal losses. And it can save money, as corporation tax is generally lower than income tax. On the other hand, there are a lot more administrative and legal requirements. Company accounts and an annual return must be sent to Companies House. Similarly, there's a legal requirement to keep company records at the registered address.
To conclude this lecture, I'd like to present 3 case studies to show the different structures in action. I'll present each case, briefly discuss the possibilities, and recommend the most suitable structure. Firstly, there's the case of Sanjay and Tanya, a couple who want to set up a catering service, delivering food to businesses. The idea is to take orders from businesses on a daily basis and prepare food for delivery during the business day. They aim to target businesses in their local area to begin with, and then further afield as they expand. Their plans include a website to display their daily international menus and to provide an online service for customers to order and check when the food will be delivered. Clearly, it's not suitable to be sole traders, but they could organise themselves as a partnership or a limited company. It depends partly on how much money they can raise and how many people they intend to employ to prepare and deliver the orders. It might be best for them to start as an LLP so that they can get funding more easily than if they were a simple partnership. They could start small and build from there. They could hand out contracts to other companies for some of their services, particularly for the website and delivery, if they intend to prepare the food themselves. Alternatively, they could set up a limited liability company if they expect to grow quickly and want to keep every aspect of their business in-house, employing staff directly. However, I would say the LLP model would work better here, giving them more time to focus on growing the business rather than dealing with a lot of administration from the start. Melissa and Jane have an idea for a website design service. They both studied software engineering at university, and so they are both well skilled in their field. They have both worked as designers for major organisations, so they have a good understanding of what's involved in running such a business. Melissa has also taken a master's degree in business administration, so she's confident about her skills as a businesswoman. They've managed to save over £3,000 to rent office space and £10,000 to buy equipment to run their business. The best option for them would be to register a limited company and start trading straight away, as they have a good level of knowledge and experience which will benefit them. They don't intend to employ anyone immediately, but the option is there if they need to in the future. An alternative would be for them to start as a simple partnership and expand from there, seeing how their work grows and then maybe setting up a limited liability company in the future. Or they could make their partnership a limited one. But if they are confident in themselves, there's nothing to stop them setting up a limited company immediately. Barry is a motorbike enthusiast with many years of experience riding bikes. He's been working for a courier company delivering letters and parcels for over 5 years now and thinks that he'd do better if he worked for himself. The courier company provided him with his work bike and took care of maintenance and repairs, so if he works for himself, he'll have to buy his own bike for work and take care of it himself. This isn't a problem for him, as he has 3 bikes for his own use already. He knows that he can build up regular clients from his contacts, but he's not sure if working as a sole trader is the best thing for him, as he's never been self-employed before. Another possibility would be to set up a limited company with a family member. This person wouldn't take an active part in the business. They would be known as a sleeping partner. Finally, he could also choose to work in a partnership with other riders who are thinking of leaving the company, but he's not sure if that arrangement would last. On balance, the best option for him would be to start off as a sole trader with his own work bike and do that for a year or 2 to see how well it went, and then make a decision about whether to set up a limited company in the future.